So I'm going to take you through an Aussie USD trade example. So basically the macro factors behind the trade, or the fundamental view behind the trade, is monetary policy divergence between the US, who are looking to raise rates, and Australia looking to cut rates. There's issues going on with China, which is putting pressure on the Aussie dollar, and the stock market is falling, so risk off. So this is the background to the trade. Now, in alignment with that fundamental view, I get a break of the key level, quite a strong break here, so that for me is a good first entry, putting our stop a little bit up behind the initial breakout candle. And then as the trade moves in our favour and consolidates and starts to break lower, there's a couple of opportunities for scaling points. Now we scale in the second time, and the market starts to reverse and chop around a fair bit here actually, so needing to be patient. You can see the 3x7 crosses here, but it's too early in the prospective trend for me to take profit, and also since I've just been adding, it's not where I'm looking to take profit, but I'm not looking to add or do anything in this consolidated period. I'm just waiting for the move, or for it to go up and hit my stop. So it doesn't go up and hit my stop, we get this further breakout. I think that was on the back of some negative stock market movements, this long candle down from memory, and you can see the amount of volatility there between these two candles. So that's a fair amount of movement. 250 points of volatility happened pretty quickly. As I mentioned, when you get these fast market types, the price can reverse rapidly, and we start to close back inside the Bollinger Band, so it's prudent to take a little bit of profit off here. Take a little bit of profit off, it means that the trade is essentially risk-free, or close to risk-free by this point. The price continues to move lower, and we get no clear technical reversal signal. We get a bit of a morning star pattern, but a morning star pattern in a trend not off any support is not necessarily a great reversal pattern. But then the price continues. We get a cross of our 3x7, which acts as one of my trailing stop indicators. Take a little bit more off there, and then the price goes up and hits the stop. So you can see it was actually quite a rapid move. So the market type became bear volatile. And then we get this reversal candle, and I entered here, and you can see there's two reversal candles in a row. I actually entered on the first one. It went up, almost got stopped out. My stop is 0.25% above the high. It doesn't. We head lower, and then we get the cross of the 3x7 again, so taking a little bit of profit here, and then we get stopped out finally on the trade on the super trend. Okay, so relatively simple trade. Again, not all trades work out like this. There's a lot of trades where you're getting stopped, you're taking the hits, you got to be coming back for more. But this is a trade that serves as a good example of how the principles of the Advanced Forex Course let you enter the market in alignment with your view, cut your losses pretty quickly, take profits when the market puts some on the table for you, and allows you to accumulate positions at the same time that you can have for when the market does go in your favour, so you can have some decent wins. Hey, thanks for your time today.